Most people don't realize what's happening. They see the headlines, crypto scams, price crashes, hacks, and they tune out. And who could blame them? It all seems noisy, unstable, and frankly unnecessary. But behind the headlines, a quiet revolution is underway. One that isn't about price speculation or meme coins, one that's fundamentally reshaping the architecture of global finance. And if you wait to understand it until it's obvious, it'll be too late to benefit from it. Let's strip this down to what matters. 1. Digital assets are becoming normalized. Fast. What used to be dismissed as a tech experiment is now being adopted by the same institutions that hold the keys to global finance. BlackRock, Fidelity, Charles Schwab. These aren't crypto startups. These are trillion-dollar institutions. And they're not just investing in digital assets, they're building around them. BlackRock's spot Bitcoin ETF hit $10 billion in assets in record time. That's faster than any gold ETF ever launched. That's not a trend, that's capital migration. These institutions are reshaping portfolios, not as a novelty, but as a new category of sound long-term assets. In parallel, governments are racing to catch up. Regulation is no longer about control, it's about integration. The US is working on stablecoin legislation. Europe has implemented MiCA, a sweeping crypto regulatory framework, and more than 100 countries are exploring central bank digital currencies. The Wild West days are ending, structure is coming, and with structure comes adoption. 2. This is not about investment, it's about utility. Here's the mistake most people make. They think digital assets are just for trading. They're not. Digital assets are tools, and they're solving real-world problems right now. Let's start with stablecoins, digital dollars that don't swing in value like Bitcoin. In countries like Argentina or Lebanon, where inflation destroys savings in real time, people are using stablecoins to preserve value. They're buying groceries, paying rent, and shielding themselves from currency collapse, all with digital dollars accessed on a phone. That's financial survival, not speculation. And the impact goes beyond crisis zones. In Europe, people are using crypto-linked debit cards to buy everyday goods, groceries, gas, meals out, without even thinking about it. The back-end conversions happen instantly. This is the internet of value, a world where money moves across borders as easily as text messages. 3. Digital assets expand access to the financial system. Right now, over 1 billion people don't have access to banks, but most of them have smartphones. Digital wallets don't care where you live, what your income is, or whether you have paperwork. They let anyone participate in the global economy. That's not just convenience, it's economic inclusion at scale. In parts of Africa, people are leapfrogging traditional finance entirely, skipping banks and building on-chain payment networks. The same way they skipped landlines and went straight to mobile phones. Digital assets aren't just adding new tools to the system, they're building an entirely new layer of finance, borderless, open, and programmable. 4. It's getting easier by design. The biggest barrier to adoption has always been complexity. Wallets, seed phrases, exchanges, private keys. But that's changing, fast. You can now buy Bitcoin or Ethereum through ETFs, retirement accounts, even apps like PayPal or Robinhood. No special skills required. Crypto rewards cards let you earn digital assets the same way you earn points or miles. Banks are exploring crypto custody, meaning soon you may be able to hold stablecoins and Bitcoin in the same account you use for your paycheck. And firms like Fidelity are investing heavily in user education because they know understanding drives adoption. The rails are being laid, the user experience is being smoothed, the friction is being removed. This is how every major technology wave matures. 5. You don't have to believe in it, but you can't ignore it. This isn't about evangelism. You don't have to become a crypto enthusiast. But you do need to understand what's coming, because like every other system that's gone digital, music, maps, movies, communication, finance is going to evolve with or without your permission. The difference is, this time the stakes are higher. Money is power, it's access, it's freedom. If the foundation of money changes, and you don't understand how or why, you risk being locked out of the next chapter of the economy. You don't need to be an expert, but you do need to get curious. Because the future of money won't be handed out in brochures. It's being coded quietly, relentlessly, and permanently into the infrastructure of our daily lives. The only question is, will you be ready?